All right. Good morning, traders, and welcome to the opening bell. Today is Tuesday, June 16th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. It's a quiet morning as we start the two-day meeting for a highly anticipated Fed meeting where newly minted Fed Chair Kevin Warsh will take the helm for the first time. There's so much to kind of conceptualize heading into this release tomorrow, guys. No changes expected, but Warsh has long been a big advocate of changing up the strategy of the way that the Fed communicates to the markets, whether it's fewer pressers or even possibly scratching the dot plot. You know, there's arguments to be made what kind of benefit that even offers the markets, but that's on tap tomorrow. In the meantime, the markets are in a holding pattern. U.S. dollar trading right above support, the euro dollar trading right above support, DXY trading right below or right above support, DXY just below resistance. And we'll be looking at all the US dollar crosses and more. Questions or trade setups, feel free to throw them on the message board. All right, great to see everyone in the room. Hey, Andre's in the house, Angie, Ashish, Daniel, Ken, Latanya, happy Tuesday to you. God bless you, Maury. Mohammed, great to see you as well. Here's what it looks like on the DXY. So the support structure and focus was 99.49. We've been talking about that since yesterday. It's the 618 of the drop off the March high, the January highs, uptrend support. It's all right there. Here's the 4-hour chart. Remember yesterday, I was telling you guys, if we break the Friday close, that might be an indication that we're going to rebound off this slope. We literally rallied an overnight trade. Right, just missed it. The high registered at 99.79. The close was 99.80. Like, you can't make this up. So you have a decent weekly opening range taking shape at a critical level in price. Again, that 99.50 level, 99.80 resistance. Look for a near-term breakout. Now, remember, the big whopper zone that we failed at remains the major resistance zone. That's 100 spot 15 into 41 there. Okay. You've got not going to go over all of the levels again, but it's a major pivot in price. The 2024 low week close, this year's high week close, it's all right here. So if we do snap that Friday close, that's still key resistance. Okay, 100 spot 15 to 35. A topside break there is what you would need to mark resumption of the uptrend towards 100 spot 72. That's the 618 extension off the low and the objective swing high for the year. But it all is determined on what happens here. Now, if this formation breaks, if the May uptrend gives way, you're looking at the monthly open 98.96, key support 98.65 into 98.68. You're talking about the 200-day moving average. Point in fact, it's also the 52-week moving average at 98.60. Okay, so the yearly moving average, the 200-day moving average, the objective August high day close, the 618 of the rally from May, all of it stacks up right down here. So you have really two key levels on the downside if it breaks, key resistance on the upside if it breaches, all going to be determined on what happens tomorrow. Now, looking at tomorrow's Fed decision, guys, we are expecting to see a hold 3.75%. The focus is going to be on the updated summary of economic projections and really the inflationary outlook, plain and simple, to put it simply. The memorandum has been signed digitally, mind you. They e-signed that with Iran and the president. Obviously, the hard copy to be signed in person on Friday, which would reopen the straits, lift the blockade. Oil prices have already started to really sharply decline. We'll take a look at those levels as well today as well. But point being, if the oil quote unquote crisis spike is abating, does that sort of tamper down this expectation that inflation is going to continue to move higher? Remember, the inflationary outlook was above expectations even before the war. So just because the war is ending and oil prices are going to be a little bit more tamed, does that mean it's a free red light or free green light to cuts? Absolutely not. The markets are still pricing in a what is that? A 57% probability that we're going to get a 25 basis point hike. Alterations to this Fed Fund futures outlook for the year is going to drive the dollar tomorrow. If Warsh comes out and he says, We're going to have to remain on hold. Remember, the committee also argued, the minutes showed us that there was a large amount of committee members that wanted to remove the dovish commentary from the remarks and the accompanying statement that they're prepared to possibly ease. That is possible. That's most likely that they're going to remove that language from the policy. The question is, what does the dot plot look like, and how do markets interpret that with regards to Fed fund futures? Now, this discussion we're having right now goes to the core of what Warsh was talking about with regards to excess communication being sort of a perversion of the markets. You know, the markets are in this twist where we're trading odds on whether the Fed's going to hike or not. What are the odds that we're going to see a shift in the Fed outlook? It's kind of a perversion of basic market theory, right? Where price discovery should happen based on the underlying assets, based on, you know, if we're looking at currencies, the GDP and inflation, all of this should factor in more so than what necessarily our focus is on the Fed. So that's all to say, guys, long-winded answer. If Warsh decides to lower the amount of communications, lower the amount of press conferences, maybe even alter the dot plot, you know, there's ample arguments to be made to actual efficacy and what the dot plot even does besides set up expectations. When we know every time we talk about the dot plot, what's the first thing out of the Fed chairman's mouth? We're not married to anything. We're not committed to these. This is just a point in time and a picture, a snapshot of where the committee stands. How actual beneficial is that to investors? So all of these questions, guys, will be at hand tomorrow, and certainly it should be an interesting time. Remember, the decision comes out at 2, presser comes out at 2:30, and the fireworks should ensue. So in the meantime, the markets are in this holding pattern. You're seeing the same thing on euro dollar. Euro is trading right at a pivotal resistance zone. Here's the daily chart. Basically, it's 116, but 115.78 into 116. You're talking about the January low close, the 618 of the rally. Last month's swing low and close low are right there as well. Downtrend resistance being tested as we speak. So it's the exact inverse of the DXY. Okay, the weekly open there comes in at 1567. We noted that as support yesterday. The weekly range, opening range, is set straddling this key zone. If we breach higher, monthly open resistance is 1659. The 200-day moving average is 1676. Look for a larger reaction there if reached. Now, how do I say this? The objective monthly opening range high is also there. So on its face, if we were to break through this zone, through that 200-day moving average, that would be an objective break of the monthly opening range, would have us looking for a late month high. That's in the scenario if you get dollar weakness. Now, if you get dollar strength and we crack that weekly open, key support doesn't change. That's where we rebounded last week, 1483 all the way up into 1511. It's a 25 pip, almost 30 pip zone, but it's absolutely critical. This is the 1618 off the high. This is the objective low day close for the year. The day the low is registered, the close of that session, or excuse me, this is not right. That's the low day close of the year. This is the November low day close. I know there's something missing there. There it goes. The November low day close. The day that the November low is registered, the close of that session was tested later that month. That level converges on the median line. That gives you 1492 into 1482. There, I knew something was off there. Sorry about that misquote on the charts. So besides that, you also have the March 2020 and the 2022 high, which we've removed from the daily charts to clean things up, but a massive zone of support. Even the near-term slope, the median line is right there. That's the break that would open up the next leg lower. Again, the low day close is actually 1416. So both DXY and Euro really contracting tight ranges. Euro at resistance, DXY at support. Look for the break tomorrow. Aussie dollar, RBA came out overnight and held rates as expected, snapping a 3 meeting hike basically that they've been undergoing. There are bets that there are suggestions. I've seen a couple of different commentaries saying that they're probably done for the year. I don't know if we can make that assumption just yet. Inflation remains hot. Labor remains pretty stable. So they've put the pause now on further tightening, and Aussie dollar not really seeing much of a volatile spike on that print. So you just tested the weekly open on that release. 70.44 held. We're right back in the middle of the weekly opening range. I'm writing a piece for this right now. It'll be on FOREX.com at noon. And basically, this rebound off downtrend support is now straddling the median line. There is a threat for further appreciation near term within the confines of the downtrend, right? We broke the median line here. That gave us the onset of the decline. This was a big support, and we posted an outside daily reversal off the support structure for that slope last week. Here's the rally. So at the end of the day, you're still in this bearish trajectory while within this channel. And there is some room for some upside, but resistance is just overhead. 70.93 is a basic 38.2 retracement of the decline off the yearly high. That's just surpassing the weekly range high. So 70.90, 70.93 resistance. If this were to breach, there's slope resistance based on, obviously that's going to be variable based on time, but you're basically looking at like 71.30s. Wouldn't want to see anything above that if we're heading lower, okay? Now, the caveat is that bearish invalidation needs to be at 71.36. It needs to be at that 618 of the decline off the yearly high. So if Aussie is heading lower on this stretch, rallies would need to be limited to 71.30s. You need a crack below 70.44 near term to get the resumptive move. Now, 70 is still huge. Remember, this is my favorite fib confluence, 100% extension off the high, 618 retracement off the low, really nice level. That's your first psychological barrier also, 70. Beyond that, key support stretches into 69.42. That's the 2024 swing high. That's the 2024 high day close, by the way. And that's also multi-month uptrend support and downtrend support. So yet another dollar cross where the levels are spectacular, but you're heading into some major event risk. The recovery off of trend support might not be done yet. You might still get another strike of 79.30, maybe even a stretch 70.30, 71.30s, but I wouldn't want to see anything above this if we are heading lower. Okay, so near term threat for some potential, the bounce just to gather pace a little bit more, but we're looking for a reaction into downtrend resistance, just a bit higher from where we are now. That's Aussie. Questions on Aussie dollar? Okay, going out of order here. Here's British pound. Sorry about that. Here's sterling. So not much to update here at all. In fact, it is one of the tighter ranges so far, but we're right below the monthly open, the yearly open, the February low day close. This is all right here, this huge, huge level. Okay, so you can see, again, objective of all analysis, this is a major pivot in price. And we're trading right below it with the monthly opening range preserved just below resistance. So you could see the last 5 days, we've been capped by the 200-day moving average. That's 34.17. That's right here. On a closed basis, even though we had multiple attempts, that's still been capping the advance. Here's what it looks like on a closed basis. And so I'm still thinking, we're at risk while below 34.74, the yearly open. Bearish invalidation, the level that would need to clear for us to get bullish would be 35.22. That's the 618 of the drop. That's downtrend resistance. Now, initial support, I was looking at this earlier today. I don't want to muck up the charts too much, but that 618 of the real near-term advance just off last week's low converges on the median line. That's near-term support. So we'll break below that, sure. Maybe we finally get the clip that we were looking for last month, this month, 32.89, 32.66. But all things held constant, you're still trading right below resistance. So still one of my least favorite setups of the US dollar crosses is sterling. It's just been a pretty messy last couple of days, even last couple of weeks, I would say. But you're still trading right below resistance at the monthly open, the yearly open, near term, the 200-day moving average. Okay, if sterling is heading lower on this stretch, rallies would need to be limited to 35.22. We need to break below 33.65 near term to go for a strike of that key support at 33, just below 33. That's British pound. All right, that's number 4. Loony. So dollar CAD, man, this thing is kind of holding. I'm impressed. So remember, 39.82, 39.77. That was our last sort of major resistance target. We also had one at 40.35, which we didn't quite reach. But on that stretch, when we closed below it there on Thursday, that was our warning, red flag that the long side might be waning. Okay. And so just as a disclaimer, I don't have any exposure on this, but it's still constructive within this slope. So we opened the week right there at that 39.85 level. Essentially, we dipped down, we popped through it again yesterday. Look for support there near term. 40.35 is still the resistance zone you need to break to unleash the next major leg. You're looking for 41. That's the November high day close from last year. Converges on uptrend resistance into the close of this week, or into the close of next week, really. So dollar CAD trading right below resistance. Now, the momentum signature isn't very encouraging. You're seeing some divergence here on the 4-hour chart. Dan saying on dollar CAD, seeing an unusual support pattern on the 5-minute and 1-minute charts this morning from 7:40 to 8:45. Any idea what could be going on there? Dollar CAD, 5-minute, oh, and 1-minute. You're getting real deep in there, huh? Not seeing anything here that stands out more than what we're looking at already. Okay, this is getting real nitty gritty in price action. But if you look at this slope, the median line is right there. So it's vulnerable from a momentum standpoint on account of this ongoing divergence. Remember, you're only looking at the highs, right? So every high since that high registered on the 4th has been a divergent signal in momentum. So remember, divergence is not a reason to get bearish. It's just a warning that the immediate upside thrust may be waning. Weird, might just be a glitch on my end. Yeah, I'm not sure exactly the level you're looking at, Dan. I'm not seeing anything that necessarily stands out. This is just real tight range bound conditions. But support 39.77 to 39.85. Watch for a region there because the weekly open is there as well in the median line. At the end of the day, support's 39.41. That doesn't change. Into tomorrow, we could probably choke up bullish invalidation to that level. But as of now, I'd still feel a little more comfortable putting bullish inval last week's low. That's 38.90. That's basically 39. That would necessitate a break of the upslope. So resistance, upcoming resistance is 40.35. Initial support, look for 39.70s, 39.80 right here if we're holding, if we're going to head higher on this stretch. But hardcore support at the weekly range lows just below 39.41, bullish inval 39. Topside resistance 140.35. Topside breach 41 all day long. That's dollar CAD. Been a real, I'm surprised. This thing's been very resilient. But at the immediate stretch, and again, remember that on the weekly charts, this is basically stretching to fresh yearly highs. I would want to see that break give some oomph. You know what I mean? Again, even on the daily, even on the weekly standpoint, momentum hasn't even broken 60 yet. So some reason to be a little bit more cautious here near term for the immediate advance, but still constructive while above 139 near term. All right, dollar CAD. So we got the 25 basis point hike from the BOJ as expected. No change in price. We're still trading right at resistance, major resistance zone 160.29 to 73. That's the high close for the year. That's the 2024 high week reversal close. Dollar CAD, or excuse me, dollar yen on the daily chart. It's also the 618 extension from the advance off the yearly low, 160.36 into 160.72. Guys, we're still there. So the only thing we have working to our benefit here is that the entire monthly range is snug right up against resistance. Support at the monthly open, the monthly range low is 59.27. That's plain and simple. Okay. A break below this level would be an objective break of the monthly range, would be a break of multi-week uptrend support. It would open up the potential for a much larger setback. Remember, these are the intervention levels. This is where the officials came in back in April. Traders are really testing the resolve of Japan right here, but no change. Okay. One quick note on Swissy. I just wanted to highlight this because we've been talking about it the last couple of days. Here's the intraday chart. I just wanted to show you that support held yesterday at 79.26. Remember, that's the yearly open. That's the 618 retracement of the entire November decline. Huge pivot in price. Upslope support is there. You now have a weekly opening range set right above the yearly open. Remember, bullish inval is at the 200-day moving average. That's basically 79.06 right now. So looking for a reaction here. If dollar Swiss is heading higher, if this bull trend is going to remain intact, losses would need to be limited to that 200-day moving average. A break of the weekly open, which is the weekly range high at 79.70, exposes subsequent targets at the high day close. That's 79.94. And then key resistance, which we just turned ahead of, which was 80.32. So Swissy levels unchanged. That support structure we highlighted yesterday did hold. The focus is now on a breakout of this weekly range. Bullish invalidation at the 200-day moving average. Gold. Ooh-wee. So still straddling that yearly open, okay? But I still think the commentary we were saying for the last couple of days remains intact, guys. If this reversal pattern off the low, which took us back above the median line, is legit, as we said on Monday, we want to see support ahead of 42.12. That's the low day close for the year. 42.24 is the 100% extension from the decline off the highs you made back there in March. And so, excuse me, that's the 100% from the decline off the yearly high. So your weekly open is right in there, So that's support. If gold is heading higher on this stretch, you would want to see losses limited to 42.12. Topside breach above 43.83 looks for resistance. That's 45.40 is the monthly open. The 2026 low week closes 44.92. That needs to be adjusted. It's not the no week. That's the March low week close. Remember the low week we just registered last week. So no change to any of the gold levels. If you're going to head higher, 42.12 needs to hold. 43.83 is the next topside breach that opens up that 200-day moving average, and 45.40. Questions on gold? If the interest rate outlook tomorrow gets readjusted even more, we price out expectations for a hike, that might be beneficial for gold as well, right? So do keep an eye on this over the next couple of days. Last but not least, from the comms at least, let me just take a look at oil. So the support zone we talked about yesterday was 79.60 into 80.75. We've broken it. Okay, that was the 618 retracement from the advance off the December lows of last year. That's the objective 2025 swing high. We're breaking through that. We want to see today close below it. That would reinforce the formation break of that multi-month consolidation pattern. Your next level down, same level we talked about yesterday, 73.63 to 73.84. That's 100% extension from the decline off that high they made back in April. That's the 200-day moving average. Okay, all things held constant, you would want to see resistance ahead of, well, let me just say this, near-term bullish inval, or bearish, excuse me, near-term bearish inval, we're going to put right back at 85, the level that we had highlighted last week as sort of the necessary break to clear this formation. Why? That's the high day close for the year. Tested as support later that month. In March, the close, low day close for April, right? And that's the level that broke, clearing the way for this formation. So near-term resistance, 80.50, 80.49 into 79.60. Bearish inval, 85 proper. Next support structure, 73.84. The yearly open from last year in the 2024 August low day close come in just a little bit lower, near 72, 71.90. But the 200-day moving average is there. Down slope support is there. So this is your next major sort of pivot zone for this oil trade as we head lower. Remember, the actual document gets signed on Friday. That's when the strait reopens for sure. That's when the blockade is lifted for sure. And this is all just for a 60-day negotiation period, guys. So hoping for the best. Markets are treating this optimistically, and we need to take this on a day-to-day basis. But all things held constant, looks like oil is taking back some of that surge. from March. All right. I think that's everything that's on my list. Do let me know if you guys have any other questions or trade setups you want to review. Quick look, just at Bitcoin, that rally starting to fizzle a little bit ahead of resistance. 68,166 is what we highlighted. That's the basic 38.2 retracement of the yearly range. Excuse me, not the yearly range. That's just the May decline. With bearish invalidation, still 70,531, 70,283. We need to pivot back below that March low, 65,000, to put the downside back in play. Still could get some more upside from here, especially if sentiment remains on a pretty firm footing. But we're just rebounding off downtrend support here. The real key level would be if we break 70,531, 283 here, but still threat for a little bit of a pop higher before you even attempt to resume or hit downtrend resistance. Okay. I know I threw a lot at you there. Went to 9:55, but we covered everything. Stay nimble, okay, ahead of this event risk tomorrow. It's likely to be really interesting. 3 o'clock today, France plays against Senegal. So I think markets will probably go into a lull based on that. Enjoy that game. I know I will. We'll keep you updated as always on MB Forex, guys. Keep some powder dry for tomorrow, and we'll pick things up at the next opening bell at 9:30 Eastern, right ahead of the Fed. Best of luck trading, and I'll see you tomorrow morning. God bless.